So you got $1,000. You've been hearing all the talk about crypto, Bitcoin, Ethereum, all these other cryptos, and you're seeing headlines like Dogecoin up 30%, Dogecoin millionaires, and you're getting curious and you want to get into crypto. And all you have is $1,000. Well, here's how you do it. And here's how you properly allocate, how you execute, and then how you risk manage. So you got $1,000. Asset allocation is really the key to all this. So staying in the game is the whole idea. Minimizing your downside. And asset allocation really comes into play with crypto. And the reason is volatility is super high with crypto and it moves fast. And you don't want to be wiped out because you bought Dogecoin at the top of its trading range and it tanked because Elon Musk said it sucks, right? You don't want to be taken out. You don't want to lose all $1,000. So here's how you do it. If you're a long-term trader, this is how you do it. Number one, crypto is still a commodity. It is still seen that way in the trading world. It is a commodity. So all we allocate to each position we buy is no more than 10%. Well, let's say, so you determine 10%, $1,000, that's 10 cryptos you can own within your crypto portfolio. All right, so 10 positions, $1,000, it's $100 a piece. The great thing about crypto is you can buy fractional shares. So that $100 could buy a fractional portion of Bitcoin. So it gives you the ability to diversify and not be, pushed out of buying one of the cryptos that you're interested in. Second step, research. What cryptos do you want to buy? Understanding what crypto is all about, it's about changing the present financial system. It's about solving a problem. So when you look at the different cryptos, I know, the hype right now is Dogecoin. The thing about Dogecoin is it doesn't really have a purpose. It doesn't solve a long-term problem. It's more of a meme stock. So meme stocks will come and they will go. Meme cryptos will do the same. So take into account that when you buy a meme type of crypto, that there is a lifespan to it, and at some point it just may go away and go to zero. You don't want that. So doing your research on your crypto is really, really important. So you're able, depending on what brokerage site you're on, you're able to download the white papers on each one of them explaining their purpose and what problem they're solving. So do your homework. If you really want to be good at this and you really want to make money on this and long term, do your homework. All right, so you've determined what cryptos you want to buy. You've got your top 15 list, okay? You're only going to buy 10 at a total because you're only allocating a max of 10% to each one of those positions. You've got that list. Now, let's go look at the technicals. Let's go look at the charts on each one of these and look at one, long-term. What is the long-term trend of that crypto? Is it upward? Is it neutral? Or is it down? Once you've determined that it's a upward long-term trend, meaning it's trending higher over 3 weeks or more, then let's look for an entry point within that. Entry points. This is where you determine the bottom side of the long-term range and the top side of the long-term range. And you can simply just take a chart and run a straight line down from the bottoms and lining that line up with the bottoms of each day and then the tops, and that'll give you a channel with which it's trading in, okay? Once you've determined that and determined where it is trading within that channel, then you pick your entry point, okay? And here's the deal about all this. It's patience. Take your time. Don't get in a rush. Take your time. Let the target come to you. Don't go to the target. So now you've determined, okay, I'm going to own a little bit of Bitcoin, all right? Max allocation of 10% of my overall assets that I'm trading or investing with. And now I'm going to buy Bitcoin. Where is it in the channel? Once you've determined where it is in the channel, if it's at the bottom end of the channel, pick your point where you want to buy it. Once it comes down to the bottom in supports and then starts to inch higher and move higher over time, then that's when you enter your trade. You buy, and here's the thing, don't buy 100% of your 10% allocation. Dollar cost average into it. So maybe you buy 2% or 4% or 5% initially. And then as it starts to confirm that trend higher, you buy another 2 for, and then eventually max your allocation out to the full 10%. Now you're fully allocated into your $1,000. You've got all 10 of your cryptos that you want to play, you're investing in. Daily, here's your daily work. 1, check where they are in the trend. Number 2, are you a long-term trader, or are you a day trader, or are you an intermediate trader? If you're a long-term trader and you're buying a position because the fundamental value that you see it adding down the road, say 6 months to 12 months and beyond, then these ups and downs are really not your concern. And where you do want to start to, peeling off and taking profits in a long-term trade is that when it breaks its long-term trend. If it breaks that long-term trend, then it's time to downsize that trade. Maybe not totally get out of it, but bring it down from a max position of 10 and bring it down to maybe 2, so that when that trend, if that trend is breaking, you're not getting wiped out of that position and losing all your profits. If you're on an intermediate trend, then you are looking at 3 weeks to like 6 months, okay? That period of time. Maybe bring it down to 90 days. So 3 weeks to 90 days. Where are you in that trend? As this position goes from initial total allocation of 10%, and you see it grow to 15, 20, whatever it goes to, start to think about dollar cost averaging out of it as it hits its top end of its trend or channel, and bring your position back down to 10%, okay? And here's why. Because when it goes from the top of the channel back down to the bottom of the channel, you are then not losing that gain you have gotten since you bought it at the bottom end of the channel. You following what I'm saying? You picking up what I'm putting down? From there, it's management. Managing your asset allocation. Taking profits, peeling profits off, and reallocate them throughout the 10 positions. And rebalancing your portfolio. Let's say your Bitcoin goes up, you're up like 20%, 30% in it, and you've got Cardano as another position. You're buying Cardano because it's a long-term belief, a thought system, fundamental thought system you got in it. And you have 8% in Cardano. You peel off that. You take those profits out of Bitcoin, bringing your position back down to 10%, and allocate another 2%, bringing your Cardano position back up to 10%. It's a rebalancing act. And as you do it more and more, you'll get really comfortable with it. Okay, so now the hype is gone. The trends are breaking. What do? Well, if the intermediate and long-term trends are breaking, then there is change coming. And when you have change coming, there's a lot of opportunity to lose a lot of money, and you don't want to do that. You've worked really hard, you've been diligent about your risk management and your whole process. This is when you start to peel back your risk and bringing your positions down from that, whatever it is maxed out at this point, and bringing them back down and taking risk off the table. And sometimes what you do is you just sit in cash, and you bring your positions down from maybe you had a big position in Bitcoin and it's at that top of the range, but it's breaking its intermediate trend. And then you peel it back and you bring your allocation down to maybe 2% or even 1%. But you still have some in the game, because like everything, you just don't know what's going to happen tomorrow morning. And Bitcoin, or that whatever position you have, will make a move higher. And that way you can participate it and then start allocating into it. But you don't want to go in completely dry, having nothing, and miss out a pop up in some way or another. So hopefully that helps. In the end, this is about a process. In the end, this is about risk management. The greatest risk managers on the planet sit around a poker table. Go on ESPN at 1 in the morning. These guys are risk managing. They got to stay in the game. The way they stay in the game is not to lose their money. You are no different. Become a risk manager. Allocation, sizing of your positions, volatility, and trading within your trading beliefs. If you love this video, hit the like button And if you would, subscribe. And also, would you share it with a friend? I really appreciate it. I'm growing my channel. I'm here to provide education. It's not advice, it's education. Take my education, couple it with other pieces of education you've learned about trading, and build your own process. And at the end of the day, it's about living loud. Take it easy.